Hello, welcome. So I'm going to give you a walkthrough of Chapter 4 exercise assignment for BA 211, right? So this is going to be a walkthrough. I'm going to give you some pointers to help you out. I'm not going to do the whole assignment for you, but I'm going to tell you some of the items that are most difficult for a lot of students. So let's go ahead and walk through this. So our first problem set, right, we're going to be setting up or basically labeling which accounts go onto which financial statement and whether it's a debit or credit, right? So really these are for the financial statement and the worksheet. So we have worksheets in this chapter, right? The worksheet is to help us get all the financial statements lined out. So this number 2 is related to number 1, right? So we have these accounts. They slide across from the adjusted trial balance column into the income statement or the balance sheet and owner's equity. They're going to maintain their debit or credit balance that they have in the adjusted trial balance columns as they slide across. One important thing to note is this, right? Income statement is going to be first, and it's going to start at the bottom. So all of these expenses down here, all of the expenses and the revenue, so starting right here in 403, the plumbing revenue, right, here is a credit. Revenues are credits, expenses are debits. This is what's going to slide across to the income statement. Income statement's revenues minus expenses, right? So that's what's going to slide across there. Everything above it, including the equity accounts, capital and withdrawals, and the liabilities, and all the payables and unearned revenue, and the assets, as we're going top or bottom to top, starting with land here, going all the way up to cash. That's all going to slide across to all the way across to the balance sheet and statement of owner's equity. Really, the statement of owner's equity is going to be all this equity stuff down here at the bottom, and the balance sheet really includes equity, but it also includes the assets and liabilities, right? So it's that's why those are kind of combined on that there. So as we go back to number 1, right, all of the expenses, all of the revenues are going to be on the income statement columns. The debits are the expenses, the credits are the revenues. On the balance sheet and statement of owner's equity, you can kind of cue off of number 2 and to help you out on this, but all the assets are going to be debits. If there is, let's see, is there any depreciation, accumulated depreciation on here? I don't see any. If we had accumulated depreciation, it would be a contra asset that would actually be a credit. All of the liabilities are going to be credits, right? So all the payables, all the unearned revenues are going to be credits. As you get to the equity accounts, like capital, it depends, right? It depends on what side of, if it's going to increase the equity overall or decrease it. The capital account is the main equity account. That one's going to follow the main capital or the main equity normal balance, which is credit. And the withdrawals, of course, are going to be opposite of that because they're going to decrease equity. So withdrawals are going to be debit balances. So hopefully that helps you a little bit on the guidance there. As we move over to this one, again, these we're doing the adjusted trial balance. This is, so we're going to have basically 3 worksheets in this exercise assignment that'll help you work through the whole accounting cycle. This is the first one. Really, this is a snapshot of the ending of the worksheet, right? It's not going to have adjustments on it. It's not going to have the unadjusted trial balance. We're going to start here with adjusted trial balances. This is what you do with this. You basically take your accounts and you slide them over to the correct set of columns. Again, all the assets are going to slide all the way over to the balance sheet. So like cash is going to slide over here. It's a debit there, so it'll be a debit there, right? As we get down to our liabilities, for example, they're a credit here, so they're going to be a credit all the way over on this side. Okay, so all the liabilities. Capital, again, it's a credit, so it'll be a credit over here on this side. So I'm just moving a couple of them over. You're going to move all of them. So I'm just giving you some examples. Revenue, as soon as we get down here on the 400s, the revenues, really the numbering on this is depending on which, how you set it up for your company specifically. These are numbered, the account numbers are used in an accounting system to help you understand the order of the accounts, and also to have a specific number associated with a specific account title. Sometimes the titles may be a little confusing, like for example the payables here, you may confuse payables. A lot of times accountants will just go by account number, and that way we don't get confused by if somebody spelled something wrong, or we might be talking about a specific payable. So a lot of times account numbers help us know exactly which account we're talking about. Also, they keep things in order according to the chart of accounts. All these accounts, again, are going to go according to the order of the accounting equation. So assets are going to be first, then liabilities, then the equity accounts, right? So just going down to the 403 here, revenue, they're not going to go all the way over to the balance sheet and statement of owner's equity. They are going to stay right here on the income statement columns, right? And all the expenses will be there. Once we line up all the expenses and on the debit side here, which I'll just go ahead and do just to give you an example. All right, we're going to pull all these expenses over here. Okay, what we're going to do once we get all these expenses lined out is we're going to look down at the bottom totals at the bottom of our debits and credits. The goal with this worksheet is every matching debit and credit column, right, every one has to balance. So we see that the adjusted trial balance does balance, that's great, but our income statement, debit and credit, they don't balance. So that's why we've got this extra little set down here, the net income, that we're going to plug in to get these to balance out. The net income will also slide over to the balance sheet and statement of owner's equity. You get those two to balance out. So one number that we derive really from the taking our revenues minus our expenses. So let's do that real quick. So 65,000 minus the total expenses we see over here in the debit column is going to be 52,700. So there's our income, net income. Could be a net loss. If it was a net loss, we'd do this a little opposite, and also I'll show you. If it was a net loss, we're going to put it in the credit column instead of the debit column, but it's a gain here. It's a net income. So what we're going to do with that 12,300, I believe is what it is. We're going to put that right there. Okay. So what's going to be there? That makes our totals balance at the bottom. We're going to use that same number over here on this side. It'll actually end up being right here for net income to help balance out our balance sheet column. So once we get all the assets and liabilities and equity accounts in here, that will make it balance at the bottom here. One thing to note, if it's a net loss, we're going to be doing opposite columns for each one. The net income, instead of being on the debit column here, it'd be on the credit column. And same thing with balance sheet. Instead of being credit, it would be debit, and they would make it balance. Really, whatever makes it balance, right, is what's going to help us there. So we'll look at that again. So here is the adjustments, right? So the adjustments column, we're going to have here in our next one, we're going to have adjustments that we're going to be doing. Really, the adjustments relate back to the journal entries we need to do to adjust balances in accounts, right? So these matching debits and credits are going to be really journal entries that we're going to be making. We're going to enter the journal entries in. They're going to change the ledger balances. As we do worksheets, the worksheet is just one way for us to lay all the adjustments out and see how they impact the balances across into our financial statements, right, as we do the worksheet. So here's the first one that I did for you, right? Really what we're doing is we're grabbing these ones with the same letter. That really helps us out, A and A, right? Of course, when we do our journal entries, what we're going to want to do is we're going to want to make sure to put our debits first, right, and our credits second. So for example, on B here, we've got our debit here to office supplies expense, $15.92. So that's going to be office supplies expense. Oops, that's not the right one. One more down. Office supplies. There we go. So that'll be $15.92 there. And then our credit will be to office supplies, $15.92. And really we're just grabbing again B and B, right? C and C. So you can basically rebuild these journal entries from the adjustments column in our worksheet. So what that's going to help us with, so really now we're going to do it in the going forward, right? That was kind of working backwards from our adjustments columns. Now we're going to actually create those adjustments columns given these this bit of information up top, A, B, C, D, E, right? This information here is going to be what we use to build our adjusting entries in our adjustment columns here. We've got to have one debit, one credit. They've got to balance. At the end of our adjustments column here, in the totals down on the bottom, it has to balance out, right? So that'll be a check for us to do, especially when you're doing an exam. They've got to balance. So what we're going to do is we're going to work, when we do these worksheets, we're working left to right, right? So we're not going to do one item and then bring it across. We first have to finish the total adjustments column. We're going to do those debit and credit first, make sure they balance. Then we're going to move across to the adjusted trial balance. Once we get those set, then we're going to move across to our financial statements, the income statement, and then the balance sheet. So I'll kind of show you how this works here. So up top here, we have a depreciation on equipment. So this is an adjustment we need to put into our adjustment column. So this is $11, depreciation on equipment. So we're going to assume that it is not in here so far. So we have accumulated depreciation. We're going to have $11 more of it. So we'll put that in there. That's our credit. Down here we have a depreciation expense. So that's going to be $11 more there. So those match. That's our adjusted entry. Okay. Okay, we're going to go on accrued salaries. Accrued salaries are salaries that actually happened. People worked, they earned money, we haven't paid them yet. So what we're going to do here, that's 14 bucks, is we're going to have salaries expense. That'll be our expense. It actually happened, right? So we get to go ahead and expense it, but we haven't paid for it yet, so it's going to increase our salaries payable here, right? So we're going to go after it just like that. There's going to be a debit and a credit. We're going to keep this, the totals balanced, right, as we go. We're going to put all of these in, A, B, C, D, E. We've got to put all these in, one for each, and then once we get those set, then what we're going to do is we're going to slide all of our unadjusted trial balances across to the adjusted trial balance. If in between there's an adjustment, which there's not going to be for every account, so for example, cash is not going to be adjusted. That's not an account we're going to adjust. And so there's no adjustment here. And so that $61 debit is going to slide right across here as a $61 debit. Okay. If there is an adjustment, like for the ones that we did currently, then there's going to be other ones that you're going to have to do. So for example, accumulated depreciation, it's a $31 credit. There's an $11 credit adjustment, right? So credit and another credit means a bigger credit, right? So we're going to have a $42 balance at the end of that, right? Okay. So same thing, salaries payable, nothing. in our unadjusted trial balance, $14 to 0, right, would just give us a $14 credit balance there. As we go down, let's go down to these expenses again. No balance in our depreciation expense yet, but with the adjustment, that'll give us an $11 debit balance. Salaries expense, we've got $26 in it so far. We're going to get $14 more, right? So that's going to be a total of $40. Right? So we're just going to slide them through. If they don't have an adjustment in the middle here, they're just going to slide right through, and they're going to be what they were in the unadjusted trial balance. If they have an adjustment, they're going to, of course, adjust, and that new balance will be adjusted for what the adjustment is. Okay, so if we have a credit and a credit, those will add together. If we have a debit and a debit adjustment, those will add together. If we have a debit balance and a credit adjustment, those will offset, right? Same thing if we have a credit unadjusted balance and a debit adjustment, those are going to offset, right? So if they're opposites, they're going to offset. So just so you know, that could happen as well. So once we get that, then of course you're going to have your adjusted trial balance. That'll be the same thing. Once you get to that point, that'll basically be what you did back here in number 2. You're just going to slide them across, add the net income in, and finish that out. Okay, so you've already done that once. That'll be easy to finish that out in number 4. Okay, so number 5, we're going to talk about okay, so at the end of the period, right, the company's adjusted account balance include the following temporary accounts. So what we're going to do is we're going to be closing these things, right? So this is closing. So in order to close, this is a piece we're going to add on, right? Closing happens in 4 steps, right? First, we close the revenue accounts. Second, we close the expense accounts. Both of those, as we close them, they're going to be closed into a temporary account that's called income summary. It's an account. It's only open very briefly during closing. And so we're going to close revenue into this income summary. We're going to close expenses into the income summary. Step 3, we're going to close the income summary. So it has balances that have been moved into it or closed into it. So it has a balance, and then we'll close that balance into the capital account. So that's number 3. Number 4, we're going to close the withdrawal account. Okay, so let's go ahead and go through and just kind of show you how these are done. Okay, so we have 2 revenue accounts in here up on top, right? So we've got these 2 revenue accounts. We're going to close those. Typically, revenue accounts are credit balances, right? So that's their normal balance. And so in order to close them, if they have a credit balance, to close it, we're going to debit that balance exactly opposite and equal to what it is, right? So our since they're credit balances, we're going to debit them. We're going to have 2 revenue accounts we'll put up here. Let's put our 2 in here. Let's see, one more is going to be services. There we go. Interest and services. So it's a credit balance currently, so we need to debit it for $8,200, and that'll close it. That'll zero the account out. That's basically what closing is we're zeroing it out. We're not going to have any balance in it. And so the services revenue again, $100,000, all right? Credit balance right here, so we're going to close it with a debit of $100,000. These get moved into what's called income summary. So this income summary is going to we're going to close those, zero those accounts out, but the balances they have, we're basically moving them, right? So that those 2 credit balances we're going to add together, and we're going to add a credit to income summary. So we're basically parking it there temporarily. So on the expense side, we're going to do the same, only opposite, right? Because the expenses have opposite normal balances than revenues do. So we're going to start off, instead of ending with income summary, the income summary is going to be our debit. That will close into. All the expenses are going to line up here. So we've got, let's see, 1, 2, 3. Salaries, depreciation, and utilities. So I'll just go ahead and grab them as they are in order. There we go. So we're going to put these down here. We don't know, we'll add them all up, but what we're going to do first is we're just going to line them out, right? So their debit balances, we're going to credit them to close them. So depreciation is going to be 8,200. Salaries expense is going to be 44,500, and utilities expense will be 5,500. So there we have it. And really what we need to do now is we need to add these up, and as we close them all, we're gonna zero all those expense accounts out, but then we're gonna keep this total 58,200. We're gonna put it in the income summary. So really what this little deal in the middle here is really the ledger for the income summary. So we see that we closed revenues on top here. That's what we closed them. And so they're a credit in there. Expenses will be a debit in income summary. As we look at our credits and debits, they offset. They're going to give us a credit balance, right? Because revenues are more than expenses here. So that's our credit balance. And now step number 3, we're going to close that balance in our income summary. Again, to close a credit, we have to debit it, right? So we're going to debit that income summary balance of 50,000. Okay, so that zeroes that out, and we're really moving it on. The final resting place for this net income, really revenues minus expenses, right, is going to be in the capital account for a credit, which increases capital, right? Net income, positive net income, is going to increase our capital account. So that's number 3. That's number 3. And then our number 4, what we're going to do is we're closing our withdraw account. Withdraw accounts are normally a debit balance. So to close it, we got to credit it. We're going to credit it for the equal amount of 13,500, right? So we're going to credit it, or we're going to close it to capital is what we're going to do. There we go. So this is going to be, again, it's going to be 13,500. And we see down here, really this is the ledger. This shows us what we just did, right? So our capital account has a beginning balance of 34,000. We closed our revenues and expenses through the income summary into capital. That's a net income of 50,000 will be closed in there. And then we're going to withdraw, we're going to debit, close our withdrawals into capital as well. So when closing's all done, all these temporary accounts, the temporary accounts being all our revenue, all of our expenses, our income summary, and our withdrawal account are all closed. They're zeroed out. All those balances are wrapped up into the capital account, and that's where they're going to be at the end of the period, which updates the capital balance. Okay, so now we're going on. We just have a few more to finish out here. And so this one is going to be, this is going to be as if, right? So we're going to do closing entries here, but we're also going to determine the net income, right? And net income is easy. It's revenues minus expenses, right? So there they all are. They're lined out there. You just take the revenue minus all the expenses out. Boom. There's your net income, right? That's pretty easy. And now we're going to do our closing entries. We're going to close our revenues. That'll be our first one. We're going to close our expense accounts, and then we're going to close the income summary. This one doesn't have us close a withdrawal account, but just the first 3. It's going to be the exact same journal entries. At least the setup is, the numbers are going to be different, of course, and the accounts may be a little different, but it's going to be the same setup that we just did here, right? So the first 3, 1, 2, 3. So that'll should be easy. So that's going to be doing that one. Now for the big one, right? So this is kind of the big one that we're going to do for this chapter. Pretty much everything that we did so far, pieces of it, we're going to do it all together. Okay, so which means we're going to first do our adjustments. Debit, credit, make sure our adjustment total is balanced at the bottom. All the adjustments are going to be here, right? Just 3 of them, just 3 adjustments. So that kind of simplifies it a little bit, but they're going to be there. We're gonna record those. Then we're going to drag our unadjusted trial balances across here to the adjusted trial balance. If we have any adjustments in between, we've got to adjust for them as we move them across, right? Then we're going to, once we have our adjusted trial balance all balanced out, debits and credits have to be equal. Then we're going to move those balances over to our income statement. Revenues and expenses will be over there. Balance sheet and statement of owner's equity, we're going to slide those assets, liabilities, and equity accounts all the way across here, right? And then down at the bottom, our net income is going to help everything balance out at the very bottom at the end. Okay, so that's going to be the first thing. Next thing we're going to do is we're going to close our revenue accounts. What numbers do we use for that? Well, we're going to go back here. Our adjusted trial balance, or our income statement, same thing. They're going to be the same numbers. We're going to close the revenues and expense accounts out there, right? Revenues first. That'll be first journal entry. Expenses to the second journal entry. Closing those to income summary. Next one will be that income summary closing to capital. The fourth one is our withdraw account, which is going to be right there. We see the withdraw account. We're going to close that one. That'll be our fourth and final closing entry here. All right, 1, 2, 3, 4, closing them out. And then this very last one is our capital account after the close, right? So this isn't the balance that we were given to begin with. This one right here. So it's not this $139,283. It'll be after it receives the net income from closing, after it has the withdrawals taken out, right? And then that'll be our new capital balance. It's kind of the same thing we did back. Let me show you this one. Oh, I missed it. There it is. It's kind of like this one, right? Down at the very bottom. This is the capital account, how it changes when we close it, right? It'll be a new balance from what we started with. Okay? So that's how you kind of do that there on that one. So that'll be number 7. Number 7 there. Number 7. That's how you do that. And then the tabs there. Make sure to do the tabs. 8. This one's going to do journal closing entries again on there. So again, 4 closing entries, and this is going to be these closing entries are going to then, we're going to see this happen with the next tab, how they actually close the accounts out. So they have beginning balances. We're going to close those out, and really at the end they'll be zeroed out, right? Income summary will have is part of this as well. We'll see how the income summary has the revenues, the expenses, then how it closes to capital, all in this this number 8 here. So that kind of shows you how it goes through there. Number 9, again, we're going to do closing, and then at the very end, we're going to do a post-closing trial balance. Post-closing trial balance will be all these numbers up here, minus the temporary accounts, right? Because they're all going to be closed. We're closing all these at the bottom, all these right there, all the way up to withdrawals. Those are all going to be gone. All you're going to have is your cash through capital on that. The capital account, this balance right here, is going to be different, right? Because it's going to have all the net income, it's going to have the withdrawals close to it, so it'll be a different balance at the very end. So hopefully that'll help you, give you some guidance there. So take a look through it. Definitely use the hints as you go through. They're super helpful as well. And when you're ready with this, as soon as you're done with Chapter 4 stuff, you're ready to take the exam. You can do that whenever, wherever, and take that exam. And you have 3 attempts to do the exam. A lot of students will redo the exam number 1 maybe at least once during the term sometime. Try to get a better score if they don't like their first one. So it's just up to you on cost benefit, right? How much time it takes you to do that one, and what you're able to get some extra points out of it to help your grade. So anyways, talk to you later. Feel free to reach out. We can do Zoom calls if you have any questions. Thanks. Bye.